Another blowout quarter for Apple, thanks in part to surging demand in China. To further discuss Apple's earnings is Ticonderoga Securities' Brian White. Brian, by the way, has a buy recommendation on Apple. Also with us from our markets desk is Dominic Chu. And Brian, great to have you here with us. We keep saying a blowout quarter, but when those numbers cross, we know that Apple typically beats, but this was a big, big beat.
This was a huge beat for Apple. And, if you look back in early June, there was a lot of concerns about the June quarter and the September quarter outlook. We did a visit to Asia. We have a proprietary index of Taiwan suppliers we call the Apple Barometer. And the trends were very, very positive. We raised our numbers last week, and I think you saw it in the results last night. So while we had high expectations, the company absolutely blew through the numbers. It was a phenomenal quarter.
Well, speaking of high expectations and curious numbers here, your price target for Apple sits at a very, very curious number. It's $666 or 666. Some may view that as a fairly evil sign out there, but why can Apple get up to $666 per share?
You know what, I look at Apple and you look at what they've done over the past 6 years. They've been growing earnings 40% a year or 80% a year, revenue 40% a year. And, just this quarter, they grew top line 82% and EPS 122%. And I think as we go forward, putting at least a 20 multiple on Apple is very, very reasonable, and then giving them credit for some of their cash. So that's all we've done.
That's the cash. I mean, Gene Munster we had on earlier, he too has a price target above $600 a share. He says by the end of the year, they're going to have about $100 per share in cash. What do you want to see them do with them, or do you want them to keep such a huge cash cushion?
I think investors, it is a concern.
Dividend? Do we want a dividend?
I think investors would like to see a dividend, possibly a share buyback. Obviously, one of the concerns with keeping too much cash is that you go out and you make an acquisition that fails or is a problem, a large acquisition. So I think people want to see them do something with their cash. Obviously, with the performance Apple's delivered, investors are willing to be patient.
Well, here's a huge part of the puzzle that maybe Apple is not getting as much a part of. We talk about their dominance elsewhere, but in social media, maybe not so much here. We saw Microsoft and Skype kind of get together with Facebook, so the titans of tech coming together there. What is Apple to do here? Can it develop its own strategy, or does it go and partner with somebody else?
It's an interesting question. So they have Ping, which really hasn't done that phenomenally well yet. I think as part of their digital ecosystem, to keep customers involved, I think ultimately they will have to do something in social networking. It's really not their business. I think partnering would be the best strategy.
We mentioned China. China revenue jumped six-fold. That's obviously a key part of their growth. What do we need to see? Do we need to see, a deal with China Telecom? What do we need to see in order to ensure that they really tap that emerging market as much as they can?
So we go to China quite a bit, and we go 5 times per year. We've been on that case. And I think when you look at China, the mobile internet there is really just starting to take off. And I call it one of the tech wonders of the world. They have almost 900 million mobile subscribers, only 74 million 3G subscribers. So as that mobile internet ramps, and I think you'll have 250 million 3G subscribers by the end of next year, Apple's tapping into that. I think it's going to be a huge, huge market for them.
All right. I'm going to leave it there. Brian, thank you so much. Brian White joining us with the latest on Apple this morning.